is Bitcoin's utility?
So put that puzzle together for us.
Yeah, Bitcoin is the most exciting asset in financial markets because of what you just described. It's this highly complex thing that everyone's trying to figure out. And I think for some people it is a risk-on asset, and for other people it is a hedge against inflation or a store of value.
So that, back to the store of value, right? Bitcoin it's an ideal store of value because it's got the ability to convey your energy not across 10,000 miles, but across 10,000 days.
I tend to stay away from giving price predictions, but I think it's undeniable that Bitcoin's positioning as a store of value and an alternative to gold, it's very, very strong and widely accepted. So
that there's a lot of merit to it. There's a lot of opportunity. It is a great store, and this is where you can debate. Is it a good store?
But you know how it's made. A bunch of computers figure out
But there's only, you could say this is a great potential long-term store of value. And it, as I said, it's like digital gold. And I believe...
But you still can't buy a slice of pizza with it.
Yes, our first paper on this was in 2015. The white paper is still on our site. And we tried to figure out, could Bitcoin serve the three roles of money? Store of value, as you say, most people agree with that one. Means of exchange, unit of account. And the answer to that was yes. And the answer to that was yes. We put out a Bitcoin brainstorm.
Mainstream media will tell you it's a store of value, but the truth is that anything can be a store of value. Ethereum is a store of value. XRP is a store of value. Dogecoin, Shiba Inu, Pepe, 4chan, Bitcoin is a store of value. Not BTC, the ticker Bitcoin for Harry Potter, Obama Sonic 10 Inu. Yes, that is also a store of value. FTT token is still, somehow, a store of value. All crypto is a store of value, but not just crypto is a store of value. Real estate, animals, trees, a car, rocks, anything can be a store of value. The real question is if Bitcoin is a good store of value or not. And so all cryptocurrencies are simply networks. Some just do certain things better than others. And while more people than ever before will tell you it's digital gold, that can't be further from the truth. Bitcoin's mysterious origins, its inability to evolve into a more efficient network, and most of all, its lack of utility, will be the causes of its downfall. In this series, I will expose all of Bitcoin's flaws and explain why it will lose its place as the highest market cap cryptocurrency this year, and which crypto I believe will take its spot. So hello, welcome back to another video. If you are listening to this, then you are the master of your reality. I am the master of my reality. And in this video, we will be going over why a store of value is not utility. I'm going to keep this video short and sweet and straight to the point. Standard disclaimer, none of this is financial advice. I'm not a financial advisor. This is for educational and entertainment purposes only. You should never take financial advice from anyone because no one has more incentive to protect, preserve, and grow your wealth than you do. Let's do a quick overview of the market. Bitcoin is sitting just above 70,000 as we speak. Current market cap is 2.79 trillion, and there are 13,500 cryptocurrencies according to CoinGecko. According to CoinMarketCap, there is still 2.4 million cryptocurrencies. And whether that number is 13,000 or 2 million, 99% of those will end up worthless. We are in the final moments of this fraudulent, speculative crypto market. as I have explained in previous videos. And so, yeah, technically Bitcoin has been the best performing asset of all time and still has the highest market capitalization. But my honest opinion is that its period of dramatic price appreciation is over. And currently, Bitcoin is simply serving as a distraction from what the future financial system will actually look like, which is commodities like gold, tokenized, and moving on top of cryptocurrencies with real utility. So let's get back to this store of value psyop. A store of value is simply somewhere where you can store value. Now, a good store of value actually holds its value, and a great store of value grows in value. And yes, technically, over its entire lifespan, Bitcoin has been a great store of value. But is that most people's experience? No. Most people have experienced Bitcoin as a poor store of value. Most people have lost money in Bitcoin. Only the few and far between have actually made intelligent investments and timed purchases in Bitcoin that have appreciated dramatically in value. In fact, 3 out of 4 Bitcoin investors have lost money. This is from a study that was taken in 2022, where economists at the Bank of International Settlements, the BIS, an institution widely considered as the central bank of central banks, analyzed data on investors in cryptocurrencies in 95 countries between 2015 and 2022. Overall, back of the envelope calculations suggest that around 3/4 of users have lost money on their Bitcoin investments. And so even though the price of Bitcoin rose from $250 in August of 2015 to its peak at nearly $69,000 in November of 2021, most people lost money. This is because Bitcoin is an extremely volatile asset, and if you are not a trained and experienced investor, chances are you will give in to your emotions and give your money back to the market maker. Another interesting fact is that the number of people using smartphone apps allowing one to purchase and sell cryptocurrencies rose from 119,000 to 32.5 million during the same period. Bitcoin has not yet proven itself to the public as a great or even good store of value. Most people, in fact, see Bitcoin as a risky store of value. Then why? Why is Bitcoin the best performing asset of all time, and why is it making new all-time highs right now? The answer to that is simply, it's a bubble. It's a cultural moment. Now let me break that down a little further. When Bitcoin launched, it was basically unheard of, the first of its kind, and it took many years for people to even know about it, much less invest in it. That's because it did not immediately go quote unquote viral. Bitcoin was created in 2009, and the internet and social media had not yet experienced this wave of adoption and use as we see today. This is a chart showing the volume of all data created and replicated worldwide around the time from when Bitcoin was created. Last year in 2023, it reached 120 zettabytes. What's a zettabyte? A zettabyte is 1 with 21 zeros following it in bytes, or 1 trillion gigabytes. And so think back to 2009 and 2010, around when Bitcoin was first launched. What kind of phone did you have? Did you have a social media account? How much time did you spend on the internet? And now compare that to today. As you can see, there has been an exponential wave of adoption and use of the internet. and especially social media, and especially after the events of 2020, when the entire world was locked inside and everyone went on the internet. This is when Bitcoin became viral. Also, because it was so hard to buy for the average person, and exchange apps on smartphones didn't exist in 2009, was another big reason the time just wasn't right for Bitcoin to be the thing, why it couldn't go viral. Also, in the time from 2009 to 2021, when Bitcoin had its peak, was 12 years. During that time, an entire generation of people that grew up with computers and the internet finally have some money now to invest. And so now that Bitcoin has finally gone viral in 2020 when everyone was at home, and especially now in 2024, everyone's talking about it, it's too late. Bitcoin has already had its run, and the next cryptocurrency cultural moment that goes viral will be driven by utility, a protocol economy. Check out this awesome video breaking down what I'm talking about, this protocol economy.
Right? It's important because Bitcoin was the originator of blockchain and the originator of some of the new practices that have become commonplace in the crypto domain. And it was hard to invest in that innovation because of the way that you needed to invest in Bitcoin through either a centralized or a decentralized exchange, and you needed to hold the asset in a wallet. Right? So it was an unusual way of accessing a new technology. Compare that to when ChatGPT came out last year, the money that flowed into these AI stocks, because people understood that company, those companies that originated these early LMM models and these early AI offerings were of huge potential value because of their innovative importance, right? Bitcoin never got the benefit of seeing that innovative importance because it was very hard to trade. Now it is becoming much easier to trade. And the reason that's important is because Bitcoin really is going to be seen as history as introducing the pivot point from today's platform economy, which I think everyone on this call is very familiar with, and many of the firms on this call have made a lot of money by participating in the platform economy. But the launch of Bitcoin really marked the pivot to what we are calling the protocol economy. And this protocol economy offers a very different value proposition, right? In the traditional platform economy, you invested into the company that built the platform, that attracted the users, and that created network effects, right? So you were buying the company based on the value proposition of it could create network effects and benefit from that. But now with the protocol economy, of which Bitcoin was the originator, right, you are buying the network. You are buying the network effects. You are buying the network. And I think that is such an advancement in the investment hypothesis. But so many people have lost that because they got very caught up in the mechanics of the early Bitcoin trading, the difficulty of accessing it. So as a product, the Bitcoin ETF is going to now have a place in portfolios because of its spectacular performance and its speculative performance in the past. But in doing so, it's going to open up the real story of innovation of why is Bitcoin having that type of performance and what is it enabling. And I think people will really start to internalize, we as investment managers, particularly who are always looking for that next growth opportunity for our clients, it will start to recognize that this is the pivot that we've been waiting for to the next economy, which is going to be the protocol economy.
And the value is in the protocol. And so, like she said, now that Bitcoin has finally become somewhat easy to invest in through these ETFs, it's too late, because other networks and other protocols that have real utility and are not just being deemed as a store of value, they actually have payments utility, actually have tokenization utility, they actually have verification utility. It's no longer going to be enough for Bitcoin just to be the first, because the value of a blockchain network is in the protocol. Just like internet protocols, applications, and user interfaces, the value is in the protocol. And if that protocol doesn't have real use case, real utility, then where's the value? It's just speculation at that point. Bitcoin in 5 to 10 years from now will be remembered as a cultural moment of disillusion, and history will remember Bitcoin as simply the first cryptocurrency. So then, if public perception is if Bitcoin is not a great or even good store of value, and most people in fact see Bitcoin as a risky store of value, imagine what happens when another store of value that also has a limited supply, but instead of increasing, is decreasing. And it is based on the same technology as Bitcoin, but it's faster, it's cheaper, and the network is more secure. Imagine what happens when this other store of value has its viral moment in time, possibly due to massive price appreciation driven by governments, institutions, and large enterprises and businesses actually using the store of value as a currency for local and global payments. Imagine what will happen when people all over the world make the realization that XRP is that store of value. Well then, my friend, we will be in a very different situation from today. And according to the charts, we are very close to something like that happening very soon. With Bitcoin less than 5% away from its all-time high, according to the 5.3 diminishing return rate rule, where cycle after cycle since its inception, Bitcoin's cycle gains has diminished at a rate of 5.3, which according to that rule, we will only get around a 400% gain for this cycle, projecting this cycle top from around 77,000 to 90,000 Bitcoin, not 100,000 plus like everyone is talking about. And before, I wasn't sure why it was 5.3, but now when we look at the Fibonacci numbers, there's 5 and there's 3, and I'm not sure exactly how, but for some reason going in reverse, 5.3 makes sense of why going back in this Fibonacci sequence, that makes sense why 5.3 is the rate of diminishing returns going backwards. If you're not familiar with the Fibonacci sequence, this rate of expansion and contraction is the sequence, the mathematical sequence that shows up everywhere in nature, including our actions as humans. So now that makes perfect sense why the rate of diminishing return is 5.3. It's simply the rate at which this cultural moment, this bubble, is phasing out. And everything has its cycles. Everything has an ebb and flow. That's how this reality works. And so make no mistake, XRP is at the center of this turbulent global transition. In due time, our patience will be rewarded. So that's it for this series. I probably won't be making any further videos about Bitcoin. I think I've covered everything there is to cover in these 3 videos. If you haven't seen the first 2, please go back and watch them. There's tons of value packed in those. And in future videos, I just want to focus more on what is right. I mean, this series was kind of like a focus on what is wrong, and I don't want that to be the focus of my channel. I want to focus on how to master your reality and what is right. But at the same time, it's critical to look at what is wrong, because there is always the spectrum of what is right and wrong. There are no absolutes. Everything just is, and it's your job to be the judge of what is right and what is wrong, whatever that means for you. And right and wrong are really just it's a paradox, because at one moment, one thing can be right, and at another, you could be wrong. And it seems like cryptocurrency is a place where you can be right and wrong at the same time. And so if you're making money right now from Solana or these meme coins, then good for you. You're right. You know, you can say that was a right decision, and that's all that matters for you. And so everything has its time in the sun, right? But some things just shine a little bit brighter when it's finally their time. And so I thank each and every one of you for watching this video if you've made it to the end. All I ask of you is that if you found this video enlightening in any way, please share it to at least 2 people. That's how we help this channel grow. Thank you. You are the master of your reality, and I can't wait to see what's in store for this year for us, for all of us who have been patient. I wish each and every one of you abundance and love, and until next time, master your reality.
I think what's interesting about Bitcoin is that, you know, it's a kind of currency. It's a store of value, although it's got a lot of volatility. But it's also a technology. I think Bitcoin may be like the Neanderthals in the sense that the currency itself goes extinct the way the Neanderthals did, but the DNA lives. I think the technology might be useful for a lot of property transfers, not just the Bitcoin currency, but also stocks, bonds, land titles, etc. So, you know, it's a cheap, open source, widely distributed, robust, heavily encrypted form of transfer technology. So maybe the Bitcoin, the currency, goes away, but Bitcoin, the technology, survives.